All right. Good morning, everybody. So we're getting closer to the end of this short week. Still got drama in the markets. The FOMC minutes really just reinforced the higher for longer narrative. There's, of course, still talk about replacing Powell and how the new guy will be a puppet for the president and will of course, do whatever the president wants, but we're not seeing that get priced into FedWatch. So, you know, if the new guy is just going to do whatever he's told, the markets should be pricing in rate cuts because that's kind of the whole idea. But they're not. They're not pricing in some de facto cuts just because we're going to see a Powell replacement. So that's something to continue to watch for. Significant changes to the Fed rate cut expectancy. Other than that, there's still war drama looming on the horizon. A member of the royal family was arrested this morning, connected to the Jeffrey Epstein shenanigans. Bill Gates canceled a speaking engagement over the same drama. So we have that in the background. We're going to get another large auction today. It's not one of my favorites, but it's still a really big one worth paying attention to. Yesterday's 1 o'clock reversal was amazing. I really hope you guys had an opportunity to play that off of the auction that came in yesterday. And you're going to get a chance to do that again today with the 30-year. Of course, we never know what the outcome is going to be of those auctions. A lot of times the auctions come in and nothing happens at all. I remember for years, it seemed like I was the only one that ever even talked about these auctions. But, just keep beating the drum, pointing them out, and warning traders that when these auctions are on the table, you want to be aware of them, even for just the bare minimum opportunity of not getting run the hell over. When we did drop yesterday off that auction, we went right down to one of my favorite pivots, the RTH Open. So, yeah, yesterday was a good day. Hopefully, we can repeat it again today. We're getting closer to the end of the week, but we're not there yet. So, stay diligent. Markets were down more. They're kind of developing a failed flag. We could possibly see a flip run back up. We'll get into that with the charts. But when you look at what's going on around the world, the numbers we see are numbers that are improving. So yeah, everything's red. The NASDAQ, the S&P, the Dow, everything's just bleeding out with small caps for the U.S. down the most. But there's nothing really here that's a surprise. Japan down 0.75%. Really keep your eye on that one. And Europe took quite a beating. So when Europe closes today, keep an eye on a change in market structure and market dynamics on the close of Europe. There's this strange little situation where if Europe was the cause of our move, whether up or down, when Europe closes, a lot of times we'll see that move stall out and or reverse. Now we're already starting to reverse it anyway, so maybe we'll get to Europe's close and nothing, like maybe that's just how it goes. But I would keep an eye on Europe's close today, see what we get out of it. So we are going to get some jobs data. The numbers are not significantly different, so we're not seeing, the opportunity for a big offsides situation. But anytime we get jobs jobs data. You want to be cautious and aware. I was talking to somebody about this yesterday, and they were looking to anticipate the numbers. I mean, you can try, I suppose, but I've never really gotten into trying to anticipate what we're going to get. Because even if you are right and you get the numbers, I mean, there's plenty of places that will give you a forecast or an estimate. But even if you've got the numbers and you're dead on, spot on perfect, it still doesn't mean that you know what the market's going to do. Maybe the market's going to like it. Maybe the market isn't going to like it. Because sometimes bad is good and sometimes good is good. Sometimes good is bad. So you're better off just letting the numbers come in and then trading whatever we do get rather than thinking that you can anticipate what the numbers are going to be and what the market is going to do with those numbers. Good luck with that. I'd rather not spend my time running in a circle. We did get Walmart's earnings. I haven't had a chance to go through the call yet. I mean, we can see the outcome here, but I want to hear what he had to say. This is one of those companies that you always want to pay particular attention to. Dig into this earnings. Listen to what he has to say. They do a lot of research. They do a lot of forward guidance on spending trends, and this provides a lot of insight. And there's a lot of money that is shaped around Walmart's forecast of their uh, upcoming quarters. So I haven't had a chance to get into it yet. I will at some point later today. You should. You don't need it, right? As always, we can do without. But the more you know, the more you can build out a plan or a theory. So why would we choose to ignore data? No big significant changes to the structure. Remember, if they do start to come in and price in a rate cut heavily, you won't miss it. It won't be subtle, it'll be really large, and it'll be swift. So you don't have to sit staring at this thing all day. Just take a peek at it a couple of times a day, and that ought to be good enough, especially after big headlines, right? That's the time you really want to go in there and see if they're making big changes. March at this point isn't quite locked in, but it feels like it is. We could get some really big shock and awe headline that knocks this down. And again, that won't be subtle. If they have to unwind March, it'll be very violent. Of course, the market would love that if we were to get a cut priced into March. So, we're talking about a massive expansion in the S&P and the Nasdaq to the upside, but it would take some big news, right? And very likely it would take some big bad news. Bad news would be good news in this case because it would force that rate cut. But I mean that wouldn't be good. That wouldn't be good overall, right? But the market would eat that up. So I don't think you really need to stare too much at March. If that kind of headline comes in, I'm pretty sure everybody's going to know it. Even, the kids that stack your groceries at the grocery store would probably catch that one. If war does kick off, um, we're very likely going to see a crude spike. They were messing around in the Strait of Hormuz the other day, just closing down bits and pieces of it, and it pushed the crude market up over $1, and that wasn't closing the whole thing down. So if the entire strait gets closed, we'd easily go to 150, right? Fast. So if you want to get some way out of the money lottos, something that just tags the edge of the curve in the bid ask spread to where you're picking up options for pennies, then it's they're only going to pay you if the straight gets closed and war kicks off. If war kicks off and they don't close the straight, you might get a little bump, right? Another dollar, but it won't be some big, $150 a barrel sort of move. And it's not going to last. So if you do get that any kind of big bump to the upside, don't get greedy and try holding on to it. Think you're going to get more out of it over the coming days and weeks, because those sort of moves don't last and they just fade back down again. All you got to do is look at an oil chart to figure that out, right? The White House risk today is less than 50, so it's moderate. It's a little yellow, right? It's a little elevated, but not much. All right, this is that failed flag that I was mentioning. Not my favorite trade, but it's pretty high on the list. I like this one. It works well. Typically, you would expect price to come down, build a bit of a flag. That's your bear flag there, and then, continue to move to the downside. What I've noticed over the years is if the flag part, not the pole, just the flag, if the flag part extends for too long, it's much more likely that we come back up instead of going down, right? Which creates like a cup shape and perhaps give us an opportunity to do a double top or a cup with a handle and then a continuation to the upside. So nice moves in the overnight where we dropped down into this area here, stayed underneath the 786. Little bit of shock and all there. Maybe they were just stop hunting. Maybe there was just a little bit of a headline, whatever. So that violence, but then, away we went. We've been working our way back up. If I had VWAP on, you would see that VWAP, at least on the NASDAQ, that's what I was trading this morning. VWAP and the halfback of this drawing are lined up almost perfectly. So 68.92 or the halfback is the stopping point for right now. You want to at least get there. Of course, if we can get above that, get back to Globex high, then we'll make a run for yesterday's high and do what we do. I do like the overnight trading. Yeah. All right, overnight we had 97. Let's just call it 98. It's close enough. The average that we're looking for is mid 50s. So we're hitting well above the average. It's You look at these sort of numbers and you think, wow, China's closed. We had an entire country not participating, and we still have really good volume. So they weren't sitting out in the overnight hours. They were in there participating. It was just a regular overnight. Nothing really stands out. The um, the idea of reciprocation is what has been on my mind this morning. How far we got below VWAP is very likely what we're going to get above VWAP once we can actually get through there. So you could take the drawing and measure it out, right? It doesn't have to be perfect. You're looking at about 0.5%. So that that gets us through the Globex high, gets us into that zero gamma zone. I need to check this. Yesterday, the spot gamma Thinkorswim levels were outdated. And I kept checking it through the day, looking to see if they were going to put out new levels, and they didn't. So all day yesterday we were running on levels that were just straight up outdated. Yeah, see, this is from the 17th. That was yesterday's, and yet we were using the 16th all day. I kept checking and it didn't change. Today, though, it's the 19th, and we have the 19th in the data. So let's just go ahead and update that. Yeah. All right. So we're still in negative gamma. We tagged that 0 gamma overnight, wasn't able to overcome it. We're still below the 20, the 10, and we're negotiating with the 3. Those are all daily moving averages, and we are back underneath the 10 week, although we was above it last night at some point. We broke back down. So here's the 10 week right there, 68.98, and there's the 10 day, 20 day, 3 day. So we're negotiating with that 3 day right now. If we can get through that, we'll make a run for the 10s. The ADRs are nowhere near us, right? We're sitting in no man's land in the middle of nowhere. We'd have to break our own Globex low and or our own Globex high to be able to challenge the ADR on either side. So GTFO, right? Get out of this box for a chance to tag 41 or 41 because we're looking at a 100-point ADR. Not that bad, right? Can handle that. So that one's just an easy little layup. To the move to the downside, though, you got yesterday's RTH. So focus on that with a 111 and a 1236. So to get to this lower ADR, we're going to need a push through the 1236, right? We're gonna need to overshoot that, and we can do it. It's no big deal. We don't even have to stay below it. We just need to wick down there and interact with it for a moment, like just dap it and flip. Really isn't much of an expectation that we're going to continue a move. If we do get a breakout up or down, the expectation is that we hold the line through the day today and we keep our eye on tomorrow and tomorrow's data. So, of course, price can do whatever it wants. If we do get the breakout up or down, it's very likely, and we keep it, it's very likely going to be on some news, and it will be, again, some sort of shock and awe, and the market just plants it with both feet and doesn't let go. Don't have that expectation this morning, right? We already looked at what's on the economic calendar. There's nothing in that calendar that should provide that sort of impact. Should, right? There's nothing that should do that. So if we do get it, it'll be because we get some numbers that really catches people on the wrong side, or it's a headline that has nothing to do with our economic calendar at all, right? It's going to be one of those two. So uh, on the bright side, it's not going to sneak up on you, right? I hate those days where we just grind lower and lower, or we just grind higher and higher, and you keep checking the news. And you're like, why the hell are we moving? I don't see any reason, and it just keeps going and going and going. I hate those days because you can't trust it. You can't figure out if it's going to stop, and it's just this weird grinding pressure that just keeps pushing us in that one direction. I hate those days. So this so far isn't setting up to be one of those. If we break with some high velocity to it, I don't think it's going to be subtle, and it shouldn't be hard to figure out why. Today's floor pivot is sitting on top of the weekly floor pivot. We don't see this very often. When we do it, it happens more on a Sunday night, Monday than in the middle of the week. In fact, it's been a long time. I can't remember the last time we had such a situation late part of the week like this, but we'll take it. The defining edges of this week's floor pivot channel is our Globex top and bottom, which is just really weird. but whatever. Like you just can't make this stuff up. We'll take it. Generically speaking, we're bearish below the weekly pivot and we're bullish above the weekly pivot. That isn't really helpful at the moment. Crossing back and forth through this pivot, of course, it should not be any form of support or resistance. And since we've crossed through it multiple times, we really shouldn't even see much of a footprint through there. We'll get to the volume profile in a little bit and see how much effort they're putting in on the line there, but I wouldn't expect much because, we're just crossing back and forth. It's almost like our borders, right? It's very porous. We're just crossing back and forth. Because of the narrow nature of the moves so far this week, our S&R lines should be relatively close. Yeah, that's what I thought. So to the downside, we're going to be able to stay inside of yesterday's range and tag the S1. But to the upside, we do have to leave the entire range of yesterday to get to R1. Getting to R1 and S1 would be at about as good as you could expect today, if we can even get that. Range day is 100% front and center my expectation for today, very much like yesterday was. So, we can get outside the box just like we did yesterday, where we expanded out of that Globex range, but we didn't keep it, right? We built that nasty trash across the high there until we finally got the dump at 1 o'clock when the auction came in, and then we fell all the way down to tag the RTH Open, but we didn't go anywhere, and that's kind of the idea for today. I have no expectations that we're going to go anywhere. So if we do, it should come with fireworks. On the week, we're still looking at a reasonably decent distribution. We did fill in this shallow area. What's up with my drawing there? Quitter. Oh, I see. It's showing up on the other side. I run multiple monitors and multiple computers on multiple monitors, and sometimes the drawing just gets a little confused. Oddly enough, when we got into this shallow area this week, we hit something. So what we didn't hit was a footprint from last week. There's a lot of stuff overhead that we could hit. It just, whatever shut us down, it wasn't from the footprint in the profile. So we got a reasonably decent textbook standard deviation. We are interacting again with that point of control, but really there's just nothing here to help us in our current week. And when we look back, there's nothing of value. We'd have to significantly expand to the downside, 6750-ish, right? Get down into that zone before we'd start to get any assistance from previous profiles. So there's just nothing out here. The main thing in this situation is that you just recognize there's nothing here and you don't try to squint through the tea leaves, right? That's a problem with most indicators, that a lot of the time, most of the time, an indicator doesn't have a signal. It is not yet showing whatever it needs to show, right? So don't force it. If there's nothing there, there's just nothing there. 10-day, 30-minute volume profile and TPO. Lots of structure across the high up here, even if we do get a move to the upside. That 40-point range is going to be difficult to deal with. Nice shallow zone to be able to work our way up there, but that 69.11, 69.20 is the last place that we struggled with, and we wasn't able to keep it. So if we get another shot at it, we could see how much more liquidity is up there. Kind of like watch the tape, see what's going on with the pulling and the stacking and the pace of the tape and the size of the orders, the frequency of the orders, just doing what we do, kind of evaluate how much might still be up there. But that's a in process kind of evaluation. Can't see it from here. We need to see it as it's happening. What we know for certain is that when we got back in that area before, we built out some levels there. Tomorrow we'll have a better insight because we still have some candles back here. We don't know how much of these candles played a role in this volume shelf. So we'll take those off the board, and by tomorrow we'll have a better idea of that 69.20 area. We are still holding above that point of control, and that's been the focus all week, is that it's underneath us. We want to keep it that way. And we're still sitting in this range. So at least we're in the positive side of the range. We got a VPOC from yesterday. It's been a while since we've gotten one of those. So this is an untouched point of control. I don't really zoom in and try to get it to the tick. You do you. Close is close enough. And we want to carry that forward every day until price gets up there and hits it. And eventually we will hit it, right? It's not like we're never going to go up. So we will get there eventually. The textbooks would tell you to carry it forward every day, whether it's been hit or not. The value area low, the value area high, the point of control. That's what the books say. Look at yesterday's levels, bring them into today's price, and that way you can anticipate what we might hit along the way. I've got enough pivots that I don't need to just generically bring over things like that every single day. So I tend to just focus on this main one, the point of control, and I only bring it forward if it's a level that we have not hit yet. I'm not saying the textbooks are wrong, just that I've already got so many pivots, I don't need more. So you do you. If you don't have enough pivots, you want to add more, those are some very valid levels to bring over. I think you'll find, though, that a lot of times the value area high will be really close to yesterday's high, or the entire thing will be along the lows, and the value area low will be really close to yesterday's low. So, you're kind of just getting overlapping levels. We haven't done anything all week, so nothing's really changed here. We're still inside of Friday's range, as odd as that sounds. That's just the way it is, right? It's what we got. So GTFO is still in effect. We got to get out of this box. And the box is just, this small box is a part of a wider box, which is a part of a wider box, right? This box that extends all the way back to October, November of last year. So, at least it's narrowing. We're getting more and more constriction, and at some point we're going to compress enough to blow up. Works for pressure cookers. So maybe we'll build enough pressure to get the heck out of here. We're still below the 10-day, which we already talked about that. We worked our way up. Now we're kind of declining a little bit. So the idea that we were going to just, come down through the line and back up again seems to be getting taken off the table. It's not to say that we can't. We've got examples here where we went down, we started to come back up, and went down again and still came through. Same thing here. We were lower, came up, and then we went low again, but we still managed to come through the line. So just because we're a little lower today than we were yesterday doesn't mean that we can't just come on up through the level. And the level change could be significant. Like we had back here, we were slightly below, and then we were above by more than 1.5. So we're talking about 1.5% above the 10-day moving average. That matters if you want to go shopping for some out of the money lottos. Look at where the 10 is, measure above that, at least 1%, and that gives you an idea of what strikes to target. Just remember the 10 moves with us, right? So if you're looking at a multiple day contract, then you got to evaluate how far is the 10 moving on a day-to-day basis. It's basically a moving average of the moving average. Starts to hurt your head after a while. All right, and we're below the 10 week, but we are on the way back up. So when we're this close to the 10 week, 1% above, 1% below, a half above, half below. When we're that close to it, it's not helpful. We're just sort of stuck in purgatory. So we need to get out of this zone or this orbit, this range of around the 10. It's like a band. So get outside of the beltway, right? Once we get far enough away, say at least a half of a percent, 1% would be better, then we're more likely to keep it and continue that push, but we got to get there. So up or down at this point, it isn't going to matter. We just got to get away from that thing. I'd prefer to the upside, but that means we got to continue to move up and get through the 10 and then continue to move up a half of a percent and then 1%. So, you know, we're looking at least 1.3, 1.4 to the upside just to get outside of that zone. Well, you know what? We got a lot of red here, but most of it is not red enough to meet our needs. We want to see at least a half of a percent, like this metals and mining. But really, that's about all we got, right? We don't have a lot here at all. So some mild weakness nearly across the board, but nothing heavy. Same thing with things to the upside. The benchmark is the same, a half of a percent. We've got some energy, oil, nat gas, just generic energy altogether. Even the VIX up. But really, other than that, we don't have much on the upside either. This reinforces my idea today that we're going to be sideways waiting on tomorrow and that there's nothing really big here at all to focus on. That, of course, can change with headlines. And, I heard this silly little idea that suppose we get the Supreme Court decision, right? And it's not favorable. And the president wants to change headlines so that, change the narrative, change the discussion, and goes ahead and triggers this war just to get the headlines to rotate. Something to think about, right? That'd be a double whammy on the market. First, we'd get the tariff hit, and the markets would react to that, and then the war would kick off, and the markets would react to that. Something to think about, right? The takeaway is know what you own and understand your risk. That's what I got for you guys. Be careful, be safe, have a good day. Watch the clock. I'll see y'all tomorrow.